The Nigeria Customs Service says trade is expected to peak during the Ember months as manufacturers make bulk importation for enlarged production processes. Well, that's according to the Comptroller of Apapa Customs Command, Mr. Yusuf Malanta, who made the statement while asserting that statistics on revenue indicates that customs will exceed its targets for 2022. A TVC News correspondent Ifunaya Eze tells us more in this report.
As the year gradually draws to a close, the anticipation is that more vessels will call on Nigeria's ports. The Apapa Customs Controller, Yusuf Malanta, expects an appreciation in trade volumes during the Ember months. He says this is because of an increase in bulk cargo importation by manufacturers in response to global trends. Based on this conviction, he is certain of exceeding revenue targets for 2022.
Why is it an amber month? It's because manufacturers try to make sure that they do a lot of production because the outside world goes for holidays December, January, and some of them come back February. So therefore, they have to have enough stock to make sure that they stock enough stock in their factory and do a lot of production for sales. Looking at the statistics of the revenue we had last month and the statistic of revenue we also had or we're having this month, you understand, we have predicted that we are going to surpass our targets.
Speaking on trade facilitation, he says that simplification of trade processes has impacted customs operations.
How did Nigerian customs simplify trade? Deployment of automated system, digitalizing the system, you understand? To make sure that this, what you are going, the hardship you are going before, through long room procedures, manual payment, you now do everything at the comfort of your office. That is trade facilitation. We provide pre-arrival assessment report where you can predict your trade, issue with the pre-arrival report to know how much duty you are going to pay if you are a honest declarant, you understand? And you pay before the arrival of the cargo and you move.
He also submits that automation has aided the fast-track scheme for compliant traders. Ifunanya Eze, TVC News, Lagos.
Well, thanks for staying with us here on the News at 1. It's time to talk business, and let's begin from the aviation sector, where the federal government, through the Nigeria Civil Aviation Authority, has suspended Asman Air 2 months after grounding aero contractors and Dana Air, reflecting the crisis in that sector. Director General NCAA Captain Musa Nuhu, who made the disclosure, explained that the agency is withholding the air transport license of Asman Air till it provides the required documentation for its operational licenses renewal and signed a memorandum of understanding on how it would remit its legacy debts accrued from the collection of passenger service charge. According to Mr. Nu, Asman Air must sign the MOU to negotiate its debt remittance, which is part of the 42 billion naira and $7.8 million debt in passenger service charge, and also provide tax clearance as one of the documentations for its ATL. He adds that the Asman Air owes up to 1.2 billion naira in debts accruing from collection of PSC, and as soon as the airline complies, it will get its approvals, as these are part of the renewal processes to ensure the regulator does not go under duress. Now, away from the aviation sector, the Debt Management Office says it has reviewed its bonds issuance calendar for the third quarter of 2022. According to the revised calendar, the DMO is scheduled to raise about 720 billion naira for some reopened federal government bonds, which has 2 years and 8 months maturity period with an original tenor of 7 years. Recall that on July 19th, the office scheduled to reopen a March 2025 FGN bond valued at between 70 billion naira to 80 billion naira and at an interest rate of 13.53% annum for the purpose of fiscal expenditures. Nigeria's Asian market sold off sharply today, and Europe looked set to follow as investors brace for a hefty U.S. rate hike next week amid growing concerns of a global recession following warnings from the World Bank and the International Monetary Fund. MSCI's Brothers Index of Asia-Pacific shares outside Japan opened today's trading in negative territory and sold off during the day after U.S. stocks ended the previous session with mild losses. In the region, Australian shares ASJ was down at 1.34%, while Japan's Nikkei stock index slipped at 1%. Hong Kong's Hang Seng index was also down at 1.1%, while China's CSI 300 index was also at 0.86% lower. And outside Nigeria now, the Eurozone inflation has hit another record high of 9.1% in August. Well, that's the latest data from the EU Statistics Office. The Eurostat, in its consumer price report, disclosed that inflation in the 19 countries using the euro rose at 0.6% month-on-month and by 9.1% year-on-year, the highest rate since the euro was created in 1999. The report also shows that the CPI was driven by sharply higher energy and food prices and is likely to head towards double figures before the end of the year. Meanwhile, the European Central Bank, whose headline inflation target is 2% last week, raised its key interest rates by an unprecedented 75 basis points and promised further hikes, prioritizing the fight against inflation, even as the bloc is heading towards a winter recession and gas rationing. In Japan, the country's finance minister, Shinichi Suzuki, has announced that he will not rule out any options in taking action in the foreign exchange market if sharp weakening in the yen persisted. According to Mr. Suzuki, the monetary authority is concerned about the recent rapid and one-sided weakening in the yen, which hit a 24-year low against the dollar earlier this month. He asked that the divergence in monetary policy between Japan and other developed nations could further weaken the yen, with the Fed raising interest rates and the Bank of Japan maintaining its massive stimulus. And finally, on business news, oil prices at the international markets were broadly steady on Friday, but on track for a weekly decline on fears of sharp interest rate increases expected to curb global economic growth and fuel demand. U.S. West Texas Intermediate crude recorded a price surge of 0.27%, selling at $85.33 per barrel, and Brent crude futures offer at $91.28 per barrel, with an uptick of 0.8%. And Bonnie Light's performance went back to the red zone, selling at $92.35 per barrel, with a price decline of 3.66%. And for the OPEC basket, crude oil dealers offer $97.30 per barrel, with an upward price margin of 15.65%. The international markets does it for us on business news. Thanks for watching.